Good evening, I'm Sarah, and you're watching NewsXstream, your trusted voice in global economic insight. Tonight, we turn our attention north, where the Bank of Canada has issued a stern warning. The growing turbulence in U.S. trade policy, particularly steep and prolonged tariffs driven by President Donald Trump, could ignite serious financial instability across Canada. In its latest financial system report, the central bank paints a picture of growing economic pressure that could affect households, lenders, and the broader economy. Let's break it down. Key developments. 1. Trade tensions fuel financial risk. The Bank of Canada stated that ongoing uncertainty and aggression in U.S. trade policy are significantly elevating financial system risks. These policies, if sustained, could shift what were once manageable concerns into full-blown economic threats. 2. IMF stress testing sounds the alarm. According to findings from the International Monetary Fund's stress testing this year, Canada's largest chartered banks do have the financial strength to withstand extreme pressure, but that doesn't make them immune. In a worst-case scenario, these banks could suffer heavy credit losses. 3. A trade war's lasting impact. Governor Tiff Macklem didn't mince words, calling a prolonged trade war the greatest threat to the Canadian economy. He noted that such conflict not only threatens growth, but increases the probability of systemic financial shocks. 4. Liquidity is high, but credit access is fragile. Deputy Governor Carolyn Rogers emphasized that Canadian banks currently maintain strong liquidity positions. However, if credit losses were to mount significantly, banks may tighten lending practices. That means less credit for already vulnerable households and businesses at the worst possible time. 5. The economic domino effect. If lending shrinks and businesses can't access capital, layoffs, bankruptcies, and reduced consumer spending could follow. This feedback loop would worsen the downturn, potentially dragging Canada into a deeper and more prolonged recession. While Canada's banking system is well capitalized and resilient, no economy operates in a vacuum. With the United States as Canada's largest trading partner, protectionist trade policies and tariff aggression risk sparking a chain reaction, starting with global uncertainty and ending with tightened credit and consumer strain at home. This is more than an economic forecast. It's a signal flare. The Bank of Canada is urging policymakers and lenders alike to prepare for a storm that could start with trade but ripple into every corner of the economy. Stay with NewsXstream as we continue monitoring this unfolding story and its global implications. I'm Sarah, and this is your evening briefing, where facts drive clarity and insight shapes perspective.